Hello everyone. I hope you guys are having a good day. And this is Mickey here. I'm going to be giving you guys a bit of an update. I'm going to try to do some on give you guys some updates maybe Monday, Wednesday, and Friday. Friday probably the weekly recap videos. But right now I'm just doing on Wednesday and Friday of this week. I don't think I had time on Monday. But right now, we're at a pretty pivotal point in the market. So we've gotten a nice bounce, essentially off the 200-day moving average. We almost tagged it. We got a lot of front running there because there were so many dip buyers came in, and now you're starting to see the price starting to reverse, right? So this is a lot of people are looking at the count for the market to be something like this, where it's a 1, 2, a 3, 4, and then you're going to extend higher into a nominal high in the market into a fifth wave, right? While this is still possible, I think that this would be the the least likely scenario in my opinion. You can see right now we are starting to break a daily cycle, right? We are breaking this trend line, but if this were to fail and reverse that back down, that would be a failed breakout in terms of the daily cycle, and that would be extremely bearish, right? So if we see a big reversal tomorrow with CPI, you would get a dramatic sell-off, in my opinion, to new lows potentially, and that would be quite a bit of a draw. I don't know if it'll go to new lows. Actually, I'm just saying it could go to new lows, but my expectation is that this could fail if the CPI comes in hotter than expected. Now, if we take a look at market cipher on the larger time frames, my primary count is that we are currently in a B wave on the monthly time frame. This is the Dow Jones, the diamonds, looking at it right now, and this is a B wave top, and we could be potentially experiencing. We have a red dot on the monthly time frame, right? This is extremely bearish right now, especially with a smaller wave, and then that's your potential B wave top here. And on the SPY, you have a 16 and a -5 on the dual band strength index. Again, a red dot on market cipher A and B, and then you could extend lower into a C wave. And then we're looking at the Qs. The Qs is actually the only one that is extremely defiant of the market. Obviously because of the Magnificent Seven, when I say Magnificent Seven, I'm referring to Amazon, Apple, Microsoft, Tesla, Google, Meta, and Nvidia. And right now, they're just breaking out like you wouldn't believe. Like, they just keep pushing higher and higher and higher, and they do not want to break lower, right? The dip buyers are holding this thing up. They do not want this gravy train to end. So they could technically still even push this up to another nominal high of like 500 before we get another leg lower down, right? So again, they can extend the divergence. They can keep pushing it higher. But eventually, I do believe that the ultimate scenario is that you're going to go lower. So if this goes higher, I would have to extend this fifth wave here and potentially make this your wave 3 top. And this is treat this as impulsive. But you could also even leave everything as is and then mark this as an ABC and overshooting B wave to a nominal high, and then you can come lower after that. All right, so essentially that's what I'm thinking is going to happen. I don't know if we're when this B wave is gonna top out. It could be any moment. On bad news, we have so much geopolitical news out there. But overall, I think this market is really detached from reality of what's going on. And the best idea to show you guys is when I look at the IWM, the Russell's 2000, right? I think you've already found your B wave top a while ago, and you have a dramatic decrease in green money flow. So you can see almost no money is flowing into these assets, into the Russell 2000, because it's the one that's at risk the most, considering how high interest rates are. These small cap companies need to borrow more capital at higher rates and are more at risk of default. So that's why the IWM could just start imploding, with mass bankruptcies coming next year. Like, this is not a good long-term look when I look at it now. It was shaping up, it was definitely firming up with that rally that we saw in the IWM when we took it back to its previous highs here. But we tried to break out. We failed, and that move was a big move down, 8% drop. We got a small bounce. Again, every bounce, we're going to new highs. It's every bounce. And then now we've broken, significant trend line supports. We finally managed to find some support at 169. Now we're tagging that 20-day moving average. But overall, I don't see much more upside in the market. But I will not, discount the fact that we can go higher, because this market that we are in at the moment is very, they don't want to let it go, because they know that if once the market starts rolling, it can get out of control very quickly. It can get hot and heavy in a hurry, right? So that's why these market makers, these institutions, they're still trying to prop these stocks up and hold them there for as long as possible, because they know once this ends, it's going to be a dramatic sell-off, because all the damage that's been done in the economy. Then suddenly all the news shifts to be bearish and bad, and now we're in a recession. Oh, the war is getting worse, and so on. In Israel and Ukraine. Oh my goodness, the layoffs are mounting now. Suddenly, the unemployment claims are skyrocketing. It's like it all comes all at once, right? So suddenly there's going to be a day, there's going to be a month that we're going to have, and it's just going to be awful, right? It's just going to be, you're going to wake up and you're going to wish that the market never opened. But right now, we could be at the beginning of that. That's why I'm urging a lot of people to be careful longing these tech stocks at these levels. And I'm buying Nvidia at these levels right now, because I believe that it's going to go to 1,000, right? And I really don't think that's going to happen just by looking at the chart. I think we've already put a significant top in Nvidia. You've seen the distribution. I've shown it to you guys of the whales unloading on the way up. You can even see it on the weekly time frame. They have been selling a significant amount. You have a huge bearish divergence here on the weekly time frame. And again, it has not broken that yet. We are testing it, right, on the weekly, but it's, my opinion, is most likely not going to break, and we're going to go lower, right? We could take a look at this on the Qs and the SPY as well. So I'll just load up the triple Qs. You can see on the weekly time frame, we broke that upsloping trend line, and we started a new, that's our weekly cycle top, and you started a new cycle lower, right? And then you look at this on, sorry, let me just pull up the SPY here. You look at it on the SPY, same thing. You had a weekly cycle. It just kept going up and up and up, and then you broke it, and now you're starting to head to new lows. Same thing for the Dow Jones and the Russell 2000. It broke and it came back up and retested it, and it just started to fall apart once again. And the Russell is just probably the worst out of all the indexes, given how many small caps there are inside that sector. But overall, this signal that we're getting on the IWM, the 22 with the -5 on the dual band strength index, the red diamond. Again, I can show you guys like what these red diamonds tend to lead to. Sometimes it can be nothing, right? When there's stimulus and there's money printing, the market can go up. But right now, there is no money printing. There is a contraction. We are in a tightening, right? And we're in a tightening cycle where the Fed is removing liquidity from the system. They granted temporary liquidity when we had that financial crisis, right? 300 billion was, or 400 billion, I believe, was injected straight into the market. And that gave us a tremendous rally from the March lows, I believe, when the banks were collapsing here in March or April, or was it here, I believe. There we go. In March, when the banks were collapsing, we got an injection of liquidity, and that propelled us 20% upwards in the market in a span of 9 to 4 months. And then now we're starting to see that liquidity, it's been withdrawn since then, and then now more some. And you're starting to see, the market starting to react to this slowly but steady. So now you're starting to see the market struggle. Today we actually had an invalidation of a head and shoulders on the SPY, which is actually quite bullish, because a failed pattern is a very bullish pattern. So this could actually keep going higher. But overall, just because this pattern failed, I am not too surprised, given how many people were looking at this. If the SPY is probably one of the most traded ETFs So I wouldn't be surprised for the market makers and the institutions to push it back up, to stop it out, and then stop out everyone else that's trading off this pattern, because that's your invalidation point. Once you get a daily close above this, you're stopped out, and then everyone's going to start to go long here again, which is exactly what the institutions want you to do, so they can exit their longs that they bought down here, and you're going to get long here, expecting a fifth wave higher. But then they could very well drag this market even lower back to the 4,000 level or 407. And then you're going to be in a heap of trouble then. Right, the Dow Jones right now, it has lost its 200-day for quite a bit of time, and it tried to regain it today, but it was unable. It's trading up in the after hours, but that's just after hours. What really matters is those daily closes and daily opens. So we'll see what the CPI is tomorrow. My best guess, it's going to be higher than expected, not because I'm short and I'm biased, but because we've seen such a dramatic rise in the month of September in the price of oil. I think the price of oil was over, essentially, like the average was probably like $90 for the month of September, and we actually reached a price of like 95 at one point for oil. So I would expect that the oil is a driving factor in the CPI, and that we're going to see more inflation. The PPI actually came in hotter than expected today. The market initially sold off, but grasped it as bullish, and then we just rallied because it's light volume, and that's what the market does essentially on light volume. I think there was how many shares traded today? Only 62 million shares, so that's like extremely light volume, peanut gallery volume. The market tends to float up on light volume, so I'm not too surprised there. I think everyone's sitting on the sidelines, essentially waiting for that CPI news to come out tomorrow. But overall, I've been getting a lot of. I've been on Twitter a lot, just checking out what people are saying. And again, I follow this guy more. he's much more vocal about it than me. But he's just essentially calling this the biggest Ponzi scheme in the market. And I mean, he's got some nice charts here, and he's got some point, right? The dollar is like a huge Ponzi scheme. Essentially, they keep printing money and issuing debt, and that is essentially almost like a Ponzi scheme, and it's going to drive this market lower eventually. Eventually, it is going to break, and we are going to head lower. But it's just the billion-dollar question is when is it going to? And right now, this is when we're using our indicators, and we're getting some really worrying signals at the moment on the Qs, the SPY, the Dow Jones. And then so also something to note that we may be putting a cyclical top in the market is that when we check the 12-month, now this is extreme because now we're looking at yearly patterns. We look at the 12-month time frame. Let me just get on the S&P 500 because I got to go all the way back on, since 1871. So right now on the S&P, we are printing a 12-month candle with a red dot right now. And this is red dot followed with 15 and -3 on the dual band strength index. If you guys take a look on the red dots, right, that we've just printed in the past, right, given previous tightening cycles, you take a look at the 1970s when we had massive inflation. Paul Volcker had to raise rates to extreme levels to get everything under control. We got a red dot and a massive sell-off of 44% into the markets. And we got another red dot here in the tech bubble of 01 or 02. All right, the year technically closed December. December 31st of 2001. So technically this is like the 02-01 bubble. And then you got a red dot, and you got a significant sell-off of 42% as well. And then you also got one in 08, right? 08. Dramatic sell-off of 52%. And now we're getting another one here in January of 2023. Or sorry, we're almost we're in the fourth quarter of 2023. So are we going to get a dramatic sell-off to end the year off? Or are we going to go to new highs? I will let you guys make the decision. And you can even look at the 1930s, right? The Great Depression. We got a red dot here. A dramatic sell-off of 79%. Well, if you go from peak to trough, it was like even more. It was like 82, 84%. but we'll go off the red dot and we'll just go from the high to the low, and that's like 76%. So we'll have to see what happens. I think it's best to sit on cash. If you're not short the market and you don't want to short the market, then sit on cash and sit on the sidelines and wait to see how everything plays out, because we are in a definite danger zone, in my opinion. I don't think you should be going all out, buying Nvidia at whatever price. Do what's best for you, but I just don't see why we would go higher in the short term, right? So that's my 2 cents on the market. I don't really have much to add. We could talk about the dollar very quickly, actually, because the dollar right now is looking very bullish, believe it or not, on the monthly time frame. Green money flow, green dot here. When we look at the weekly, we actually starting to see a bit of a slowdown now. The momentum wave is starting to curl in. The green money flow, almost cut into the zero line and into the red. We actually have a 16 and a -2 on the dual band strength index, and the daily is actually getting a bit of a slowdown now. So it's not looking as bad. We actually had a 19 and a -1. Now it's an 11 and a 0. If we go on some smaller time frames like the 4-hour, we actually printed a bit of a green dot here. And if you go on the 12 and the 8, maybe you have another red dot, a green dot as well. So we might be getting a bounce in the dollar soon. Given the news tomorrow, maybe it's going to be hot CPI, and we're going to need higher rates for longer, and that's going to be driving up the dollar, which is bearish for equities. So we may be putting another low here for the S&P if that happens, right? Which could extend the fourth wave maybe a little bit lower. And I actually have to redraw this one too. This one too is actually here, I think. There we go. So if this happens, then you can extend the fourth wave a little bit lower. But if it goes too far, then you might as well be starting a 1, 2, 3, 4, 5 pattern towards the downside. So this might have been your 1, 2, right? 3, and then maybe you're in a fourth wave now. You could get an extended fifth wave, but on the larger scale, it would be a 1, and then you get a 2, right? I don't know how, when or how this is going to bounce, and then a 3, 4, and a 5, right? And then you'll start to come down in a dramatic fashion, and that's your bearish case. Your bullish case right now is that you keep pumping. If you're bullish, you gotta keep buying, right? And you gotta keep pushing this to new all-time highs. And you gotta have really good news followed with it right now. But at the moment, we don't have really good news in the market. We have geopolitical risk. We have wars in Israel and Palestine. We have oil starting to climb back up, although it is starting to drop now after being so overbought for so long. But it could be putting in a bit of a bottom here. And it could still extend higher, right? In my opinion, this could still be a fourth wave. So you go to 1, 2, 3, 4, and a 5, and you could still come back up and make a nominal high at either like 100 or 105. So I don't know. We'll have to see it. Take it day by day. I would not be getting too long the equities right now. I know some people are really convinced that it doesn't matter. We will not go lower. Right, which is really dangerous when having that kind of mindset, because you don't know what can happen in the market, and you can wake up one day and you have a huge gap down, and you're loaded up on calls. And I see people on Twitter, they just keep tweeting, I'm long 130% of my portfolio. I'm leveraged up an additional 30%. Long, buy the triple Qs. Right, I cannot stop longing. Longing is the best. We only go up. I just need to. You gotta be careful. You gotta be careful. You can long the Magnificent Seven, but eventually they will top out and they will get a dramatic sell-off. Anyways, that's my 2 cents. Hopefully this helps. Do what's best for you. On the weekly cycle right now. Actually, I'll cover the weekly very quickly. It's looking like we're starting to slow down a little bit, but I like to look at the larger time frames, which is the monthly, because you could have a bunch of weekly candles in 1 month, and right now the month is not over. The month can still go lower, right? We still have 19 days left in this month. So right now we're starting to get a bit of a neutral day, a neutral week on the Dow Jones, the SPY shaping up a little bit better. Same thing for the Qs. It's looking like we could go higher. It really is. It really is looking like we could go higher. But the month isn't over, and if the month if we start to get a sell-off, then that might be it. We may start to go significantly lower from here. All right, you guys have a wonderful day. Peace.